Hello, 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 everybody. Here we are again, Karima Chronicles. Guess what? I have a real estate agent in here with me today, and he has so much experience in selling real estate. I would like you to introduce yourself and how long you've been selling houses. If you don't mind speaking up a little bit because we don't have mic set up. I'm sorry.
Oh, no worries.
So, who are you and how long have you been selling property, real estate?
My name is Angelo Cooper. I'm with the Coop Group.
Okay.
My company and I are associated with Keller Williams Realty. The Towson office, Timonium office, more specifically, is my home office. I am actually one of the investor owners of that market center. Market center, pretty much different locations, basically. I have been practicing, I have been involved in real estate since 1998. So,
98.
when I did the math, that was over 26 years.
That's a long time. I'm sure you have seen a little bit of everything. For you to have been selling houses, I mean, the ups and downs of the housing market has really, even to someone like me, has been crazy. Specifically for me I guess when I started paying attention in '06, '07, I think we were, yeah, okay. That was the first time I really paid attention to what was going on. So I could just imagine. And then we had it another time after that, right?
The pandemic served as another housing boom because the interest rates were so low. And they did that because the establishment wanted to make sure that the consumers weren't in fear of living their life because this pandemic there were so many uncertainties. Nobody knew what was going on. So in order to stimulate consumer growth confidence, the rates were like slashed to historical record lows, basically. So that was the second boom.
So let's go back to '06. If I'm not mistaken, '05, '06, '07, somewhere in there. It was a lot of bad loans, but you don't deal with the loan part.
No, I'm not a lender. I'm the agent. So let me give you more context. So I know most people are like, wow, this guy's only like in his 20s, and how did he start real estate when he was, in 1998, 26 years ago? So yeah, don't let the years of experience fool you, basically. And I also want a person to think that I'm antiquated. I was just doing real estate, when I was in my diapers. So.
Okay, you can keep talking.
Okay, got it. So in '98, I actually started out as an investor, and so
okay,
I wasn't a licensed agent as of yet. I actually was buying multi-unit properties.
Okay.
And I moved back to the Baltimore metro area from Philadelphia.
What gave you that idea to do that at such a young age? What?
Right. So we discussed generational wealth, diversification. I was always taught that you don't put all your eggs in one basket. The whole key is diversification, multiple streams of income, basically. And so therefore, when one thing isn't working for you, then you have something else that is to help to generate that income. That's why you find a lot of your big corporations and establishments, such as I'll say McDonald's. A lot of people don't know at one point McDonald's owned Boston Market, Chipotle. A lot of people don't know that Ford owns or did own Range Rover, Jaguar. They also own, of course, Lincoln Mercury. So, these big establishments, they follow that model. They make sure that their portfolio is diverse, so therefore when something slows down for them, their money is still working in other capacities. So real estate, the American dream, when you look at real estate as opposed to other investments, I was entrenched in the stock market. I own stocks. But when you think about real estate, and if you look at, historically, they say buy land, God isn't making any more of it, right?
Mm-hmm.
So when you look at anything else, it's the rarity of it helps it increase in value,
Mm-hmm.
basically. So, me and, from business was innate, and also, my family members, there's certain characteristics. My dad was resourceful, my grandmother was a hustler, my mom very sociable. So when you take those characteristics and you put them together, you can kind of see where that business psyche kind of evolved. So I thought to myself, I wanted more information. So if I'm buying these apartment buildings, I said, well, I need to educate myself more about, this industry. So I actually acquired my real estate license in 2000. Not at that time with the intent of selling real estate. It was just to empower myself more, because I come from humble beginnings, and where I grew up
And
in Park Heights.
Park Heights.
Well, pull your guns up.
Yeah. Park Heights says a lot.
So,
however, I used to live in that area as well.
Yeah, so hey, it's about being versatile, well-rounded, and I'm blessed, and I pride myself on that. But you find salesmen have the stigma of, in order to be successful, you have to either harass people or you have to kind of smooth them. However, you learn that when you look at wealth, those people who will end up being very successful are the people with entrepreneurial mindset, people who are in sales, people who come up with inventions, people who invest, basically.
Mm-hmm.
So those are the attributes of people who become wealthy. So I learned, as long as you're professional and you can empower a person about the product, it will sell itself, basically. So and then learning that concept, and getting into real estate sales, also having investments. I was building multiple streams of income, and even the corporate job, which I once had, did teach me structure. How to structure my day, basically. So and I think it was a necessary evil, because most people think the grass is greener on the other side until you get there. So I actually had an opportunity to experience it full circle, and so from that I'm like, wow, I'm salary. I know what I didn't want to do, and if I'm putting all this time into someone else's business, just think about the time if I put it into myself. There's no limitations, no glass ceiling. The sky's the limit. So at that time, I had multiple streams of income I was starting to establish, and so you have that old mentality that jack of all trades, master of none. Well, I'd much rather be a jack of all trades, basically, for the reasons that I mentioned earlier. Diversification. When one thing slows down, you have other things, and there are things you can do to really make sure you're pointing to your business. It's not like, oh, you got all these businesses, then when do you have time, or how do you have time to focus on things? So in business, you learn the significance of leverage, hiring help. So what it does, it creates a trickle down effect, and you're able to create streams of income and also opportunities for other people as well. So with leverage, you're able to do that. So just to kind of backtrack, and then I'll bring it forward. So I was making money from the rental properties. I was making money from real estate sales. And then I started doing real estate development. So when I did my first development project was in 2002. So I left corporate America then, and so from 2002 to now, it's just been real estate ever since. And so I do real estate in multiple capacities. I'm not just your traditional agent. I'm also that I'm an investor. So for me and my clients.
So you are an investor, but do you help people?
I do.
Okay.
And so I was just going to talk about the whole integrity piece. When I come to a person and the person looks me up or they need help from me, it's not like I'm just speaking from a real estate sales person perspective. I'm the actual guinea pig because I've done it. So I understand the investment side of things, whether it's rental properties, whether it's development properties. So I'm licensed in multiple states. I do residential and commercial real estate, but I'm also international as well.
Okay.
So.
And international means what?
So I actually have real estate developments in other countries. So the first country that's been a part of that portfolio is Dominican Republic.
Okay.
Excuse me. So over in Punta Cana, I own a 2-unit property. One unit is designed for long-term rental, and the other unit is Airbnb, basically. So the next phase of that acquisition will be Costa Rica this year. So I'll have 4 to 5 within the first phase, and then in the second phase, I'll kind of broaden horizons into, other areas of real estate.
With everything that is going on now economically, is home ownership still the American dream?
So it's interesting. That's a great question, and one that I pondered. I just sold a client's house, and we actually sold to immigrants. So that their loan was denied initially, and remember, I handled the seller side, but I found out because of the changes with the current administration, and they were able to get approved with another lender. But now, as far as home ownership as it relates to immigrants, with the current administration, if you're not a citizen, then there's certain restrictions that are imposed. So whereas though before you could have a green card, excuse me, or you can have a visa, it was something that they wanted to encourage people to purchase, especially immigrants who come here, the American dream. So
I'm wondering, did they have more resources than Americans?
Well, when you say Americans, when you get into certain ethnicities of Americans, then, arguably in some cases they may have more resources than, African Americans and the Latinos. So, that's facts, that's the world that we live in.
Okay.
But to answer your question, for immigrants who have been deported, and if you look at numbers, the tourism industry in this country has gone to hell in a handbasket because of the current administration. People don't want to come here, and we were making so much money. But now, with the ICE situation and with the mindset of the current administration, people don't have a desire to come. And so it's interesting. I don't want to get political, but a lot of these people need to have foresight. You know, you don't want immigrants to come now. Facts. You know, this country has been built on the backs of immigrants, especially African Americans, right?
Mm-hmm.
So now, whereas though you're imposing these restrictions, what people are failing to realize is that the economy has a trickle-down effect. You look at what's going on over in Iran.
Mm-hmm.
Gas prices are up prior to that, inflation up.
Mm-hmm.
But not only that, so it has a trickle-down effect on consumer confidence, right?
Mm-hmm.
And the other thing is, if the tourists aren't coming with those dollars, then that's something else that, you know, really, you know, puts a strain on the economy. So I think people need to have more of an empirical perspective and look at not only how I'm impacted, because we pass on at some point, and then we want our generations, you know, our youth to thrive. And the only way that can happen is if people stop just focusing on themselves. But I stray. To answer your question, ironically, it is still the American dream to actually, you know, purchase. And the whole adage for me is, if you have some place to live, you may as well own it. Right now, rental prices are through the roof, and you can actually own a house for, have a mortgage for what people are paying in rent. And even if it's a couple $100s more, you're still ahead because you have an asset. You can reap the tax benefits. And I encourage you to, you know, seek advice from your local CPA. But that's one aspect. So when you think about, you know what, I got something tax deductible, so there's a larger refund I'll get. That'll offset any slight increase. The other benefit is, excuse me, you can go in there and do what you want to it because it's yours. And then the symbolism behind 40 acres in the middle. Well, hell, don't tell me that this country doesn't have money for reparations anytime they can come up with a slush fund for these insurrectionists.
Mm-hmm.
So yeah, that's symbolic in that regard.
So just like, okay, if I'm picking up what you're saying, you said gas is up, tourism is down. Is interest rates up or down?
Right now, rates are where they were post-pandemic, and a lot of people were spoiled because the rates that a lot of people were able to obtain during the pandemic were literally like the second coming of Christ. So if you're looking for rates to get that low again, it's not going to happen.
Not going to happen.
Not probably in our lifetime. Nothing's impossible, right? So,
wow.
So rates are back to where they were before. And once again, if rental prices are through the roof, then it makes sense to actually, you know, purchase. If you have to have a place to live, you may as well call it your own.
So if now is any time a good time to buy in a buyer's market or a seller's market? Is it always a good time to buy?
It's always a good time to purchase rather than rent, especially if you have to pay.
Okay. So what if I'm coming to you and I'm like, listen, I saw this video on Karima Chronicles and I just want to, I think it's time to buy. What do I have to come with?
So, a few different points to that. In terms of what a person needs to qualify for a mortgage, I can run through those things. In terms of timing, historically, you look at how the market may change, but there's so many independent variables that don't have to do with time of year that can have an impact. So let me touch on at least what a person needs themselves to have the prerequisites in order to qualify. Then I can kind of, talking about like cyclical and how the market reacts, and I can even go deeper the difference between a buyer's market and a seller's market, basically. So in order to qualify for a mortgage, the first thing that a lender wants to see is a middle credit score of at least 620. Okay.
620.
Now, can you go lower? Yes, you can. Those loans are harder to do.
But it is possible.
It's possible, but at the same time, you want to set yourself up for success, and peace of mind is priceless. You know what I mean?
Yes.
Also, the lower your score, the lower the rate. I'm sorry, the higher the rate, basically. I'm sorry. Yeah, the lower the score, the higher your rate.
Okay.
So that's why it's another reason why you want to have a decent interest rate, basically. Typically, the way banks work, they base it on risk. The higher the score, the more money down, the lower the rate. So typically, on average, you want to be at like a 620, and that's typically for an FHA loan. And I can get into the weeds, but I'll just kind of cover one topic at a time. So traditionally, you have three credit scores, and so out of the three, lenders always look at the middle score because they feel like it's being more objective, basically. In some cases, people may only have two and they look at the lower score. So you have your three credit repositories: Experian, TransUnion, and Equifax, basically. So that's the first prerequisite. The next prerequisite is at least 2 to 3 accounts that you've been paying on time for at least 12 or more months. So you have two types of accounts. You have your traditional accounts and you have your non-traditional accounts. Typically, the lender wants to see 2 to 3 traditional accounts, and I'll explain to you the difference between them. Your traditional accounts are those accounts that report to the credit bureau whether you're on time or late. So for example, it can be a credit card, it can be a store account, it can be a personal loan, it can be a student loan, it can
cell phone?
Be an auto loan. No, that's considered non-traditional.
Okay.
So I just gave examples of your traditional accounts.
Yes.
Your non-traditional accounts are any utility. It can be water, gas and electric, auto insurance, rent, cell phone. Now, a lender will consider your non-traditional or alternative, they use interchangeably, if you have at least some traditional lines. If they feel like they need other trade lines, then they'll sometimes pull in your non-traditional accounts, such as your cell phone, things of that nature, use to help build a score. Now, with those, you actually have to get documentation that you paid them on time, because the only time they report to the credit bureau is if you're late. So that's the next thing they want to see. The next prerequisite are no accounts in collections or past due. And so if you have them, it's not a reason to feel like, oh, it's the end of the world, because it's not uncommon for a person to may have medical collections. So the whole key is to, instead of trying to be
if they have medical bills,
yes,
you don't hold that against them.
It's not held in any great despair. You know, I was just going to say that instead of, oftentimes consumers try to play doctor and they want to assess themselves rather than get in front of a professional. A lot of times the misnomer when I'm talking to people who are looking to rent, I'm like, well, how much are you looking to pay? And they're like, oh, I'm just throwing out random numbers, 2,000. Like, do you know you can own? How come you're not? Oh, well, I thought to buy was a long process, or I thought that, you know, I needed an exceptional credit score. Well, when you go to rent, you know, credit score is a factor. It's less bureaucracy. But then, I don't have enough money. Well, there are grant programs, and then if you're working with a skilled real estate agent such as myself, we can actually negotiate to have the seller provide the closing help that you may need. So But to get back on track, so if they're medical bills, it's no big deal. Again, getting in front of a lender, I have my partner lender, then they'll take a look at your credit profile and determine your affordability comfort level, as well as which grants are applicable. And if you fall short of the criteria, my resources will actually help you. They call it a simulator. Address those things to get you to the point where you need to be to purchase, basically.
So a lot of times, some people, they feel like, oh, he's not going to want to deal with me because I can't afford much. He's not going to work for me. He's just trying to get his commission and that's it. But that is not what I'm hearing from you right now. It sounds like you're saying you help people get in, or I'm going to say achieve their goals. You help them with different resources that only really kind of you are privy to because you're in the field. Like, you have different avenues to, so if nothing else, it would not hurt to just make a phone call so you can see
exactly
what the situation is. No need of being ashamed of your situation, because it could be likely that you say, wait a year, pay your bills on time for this amount of time, and that'll help you achieve your goals. So you have access to things that the average person like myself does not have access to. Still educate yourself, right?
Sure.
But you are here to help achieve a common goal, which is home ownership.
Exactly.
Mm-hmm.
Before you move on, because I know I wasn't done with the prerequisites.
Oh, my apologies. My bad.
So we're almost there, though.
Okay.
So the next thing is making sure you have at least 2 or more years of consecutive employment. And so, for example, there's an exception to that rule. If you were a student and then you entered the workforce, and you were a student for like that, most of that 2-year history, then that's an exception. If you were in the military, then that's another exception, basically. And then last but not least, they at least want to, you want to have some money to go towards your closing costs and down payment. So financial resources such as checking, savings, retirement, or you can even get gift funds from a relative.
Okay, so someone can gift you money.
Exactly. A relative, notably. But there's certain workarounds. So that's the preliminary criteria you need to actually get started. So,
okay.
Yep. So I covered that.
So if I have a boyfriend that gave me money to help with my down payment,
no.
You won't accept that.
Boy, you said boyfriend.
Yes, I said boyfriend.
If it was a husband. So there are traditional approaches, and there are certain ways you can circumvent, in some cases. But just to kind of be direct, if it's a boyfriend, no. Remember, gift funds from a relative. So, if he's going to say, if you're going to say,
so can I say that's my cousin? I mean, are y'all going to go through the family tree and investigate? Can I just say that's my cousin?
As I indicated, there's certain ways to circumvent processes and loopholes.
Okay. Well, I guess we can leave it right there. We're going to leave it right there. So I find that certain people, when it comes to home ownership, sometimes they'll say, oh, that's too much work. I don't know people that can help me, like if something should break. Like it'll be something that simple,
right,
that will turn them away.
I mean, facts.
Why are people so afraid of home ownership? And why aren't more younger people purchasing a home? Like some people say, I'm waiting for my husband. Do you suggest that?
No, because with or without a husband, you need shelter, and so, hey, it's knowing your priorities, and survival instincts,
Mm-hmm.
they kick in. What you mentioned is a popular, concern for most people. People, they want the perks, but they don't want the responsibility, right?
Mm-hmm.
Everything's a gift and a curse. With life, with anything, you get out of it what you put into it, right?
Mm-hmm.
So, for those people who usually have concerns about maintenance, things of that nature, it creates ethics. Again, anything worth having is worth working for. You can appreciate it more. But there are things designed to minimize the maintenance. So that's why we perform our due diligence on the front end. That's why you make sure you maintain throughout the life of the house in terms of getting your annual checkups. But you also have home warranties that can also minimize those expenses, homeowners insurance, things of that nature.
Mm-hmm.
So there are ways to keep things from being overwhelming, depending on your real estate resources that you partner with.
So you mentioned earlier that you do sell land. That is something I have heard growing up as a child. Oh, we got land down south, and they hold on to this land, and I'm just thinking, why are you holding on to land? Like, what is it has to be something to this historically that people value this land. So then I asked certain people, and they were like, well, they ain't making no more land. But I'm like, but just to have land just sitting there, wouldn't you want to buy a house on it? I mean, build a house on it? Like, what is the benefit of having land and actually pass it down generation to generation, and no one's doing anything with this land?
Bragging rights, right? That's crazy. So, I mean, whether it's a house you inherited or land, it's an asset, and that's something else. The lack of,
does it gain in value just like a house does, or
it can, anything can, and things can depreciate depending on market conditions, depending on location. That's what real estate is based off on, and so that's the other challenge. Most people lack education and knowledge when it comes to real estate. When you look and you realize that this is an asset, and I can use it as leverage to pull equity, to have money for a business, to have money to buy another property, for a vacation. It's an asset, and you use it as such.
Did y'all hear that? He said you can pull equity off of your asset. You can't do that when you renting. You can do that when it's yours. So you can use that money to help start your business. Is that the beginning of generational wealth?
It is. And credit, I mean, that's something else. To the simplest form, people will hold you to what you say. That's how you build integrity. That's how you build a reputation. So it just starts from being a person of your word, right? That's what credit's based off on. If you say you're going to do something, then follow through with it, right? And so, just in the simplest denomination, like that's all credit. And people, when you think about it, hey, you got this financial obligation, you needed it for this purpose, and you agreed to these terms. Be the person of your word and follow through with it. So, just credit, that's relationships, All those things are just to the simplest form. And obviously, when you feel like they've gotten more complex, then you need to reach out to a professional in the field that can guide you.
So we may have somebody, let's say 25 years old, and they haven't really heard of too many people at their age buying houses. Is that wrong for them to wait? They've been on their job, they're in their career. Is that a good idea for them to just go for it now? Why wait? Because you're still creating generational wealth. You still bringing something to the table in a relationship.
Right. People fear what they don't know. So once again, inquire in mind, do the research. So to touch on that point, at one point in time, when you look at older generations, it wasn't uncommon for people to buy and invest in real estate at such an early age. I find that the generation today, they're more apprehensive. And
did they ever say why?
well, I was going to say I believe the whole reason behind it is non-committal. They feel like they want to spread their wings and just fly away. And what they need to realize is,
where they going?
When you buy,
you flying, but you ain't. Where you going?
When you buy a piece of real estate, that doesn't mean you're married to it. Again, it's better to have assets, maybe a small portion of liquidity if you're disciplined enough not to just run through it. But at least that tangible asset will appreciate for you, right? So whether you decide, it's time to move on, I'm gonna cash out and I'm going to use the monies for my next move or venture, or I'm gonna rent this out. You can rent. That doesn't mean that you have to stay put there. So that's perspective, because when people realize that, no, it's not that long-term commitment, you can buy or sell. That's one of the benefits of real estate. Then that helps to overcome that fear. Now, to your point, ironically enough, you actually have the older generation. They say, I read a reputable report that now the average age of a home buyer is 59 years old.
Really? So even after 50, it's not too late.
No, it's not. Again, you have to have some place to live. You have to pay for it. Why not own it? Why not have the tax benefits? Why not have the autonomy? Why not have the appreciation? Why not be a step closer to the 40 acres and a mule? Because I think it's obvious that this country ain't gonna pay us no reparations.
We got created ourselves.
Exactly.
That's right.
Yeah.
That is awesome. So even after 50, is there such thing as at a certain age they will not give you a loan? Is that a thing?
I've never heard that. As long as you're ready, able, and willing to pay back, what you borrow, because you have a stream of income.
Okay.
Then no. That's discrimination.
Oh.
Yeah, you can't discriminate based off of age.
Okay.
Now, it may be for some riskier, some institutions, and they still can't associate age with the reason that this rate is so high, especially if you show that you have the assets and you're able to pay back that loan. Then
so I think a lot of times people, or I'm gonna say people, I'm not gonna direct it to a certain age group. They think they gotta buy one of these houses, new built, 500,000. There are other houses out here that they can purchase that is well beneath their price range. And you being practical, and you can still reap the benefits of the increase in equity. You can still reap the benefits. So you don't have to purchase. Is there a certain amount you won't go below as far as selling?
No. So in terms of the commission structure, I can touch on that. But to your point more immediately, no one owns the perfect house. Even the $1 million homes, the custom built homes, nothing's perfect. So sometimes a person gets so caught up into, this doesn't check off all my boxes. Okay, the whole key is to capitalize on the moment, invest your money so that it appreciates and you can upgrade to that next property. You know, that's what life is all about. It's levels to it. In terms of compensation, whenever a person is buying, for the most part, the seller is actually paying the commission, or a huge portion of it, basically. And so it's only when you sell a house that you're paying a commission, typically to both agents. It's traditionally how that works. So,
do you prefer to work with sellers or buyers, men or women?
Oh, I mean, in terms of age, sex, color, culture, religion, it doesn't matter to me at all. Yeah. So no preference there.
Who do you work with more? Because statistically, it's more women that purchase homes.
You know what? I had to do a quick mental crash to determine if, just based off of my last few transactions. I mean, there's some validity to what you just said. However, at least I know with my clientele, it's no huge gap like statistics show with women purchasing more than men, or selling in that case. But I would think, for the most part, my experience is that, yeah, a huge percentage of females are purchasing.
Is it your experience that it's more black women or white women purchasing, or black people in comparison to white people that purchase?
Well, from my experience, I mean, the majority of my clientele are people of color, people. However, I have a very diverse book of business. But typically it becomes natural that people will do business with people who look like them, or they feel like they can relate to. But my share of, I wouldn't necessarily say white, so to speak, but other ethnicities is pretty high as well. However, one probably would say, well, statistically it shows, you were going to touch on this, the majority whites have a higher percentage of home ownership than minorities. And when I say minorities, that's blacks, Latinos, etc. And that's because they have more resources, relationships, connections. And so, I mean, let's face it, it's they were given a head start, and so that's the reason behind that.
What are your thoughts on, I love looking at real estate, I love looking at houses, and I find that there are so many like huge homes, and it makes me think about, like, back in the day, families lived together. What are your thoughts on, if, like, how would you redo that today? Does one person own the house, the family house, and if everyone's paying towards the mortgage, like, how does that work? Or would it work today where families live in this one house and everyone benefits from it, outside of the obvious of you're not paying what you would pay if you lived on your own, but that one house is steady building equity? The person that has that loan, that they're paying off the loan because of everyone's input, is that wise to do today, especially with everything being the way it is?
I think it's strategic. I buy multi-units, and so other ethnicities, hey,
They do it.
Each one reach one, right?
Mm-hmm.
You know, and I don't want to call out any ethnicity,
Mm-hmm.
but they don't care if it's a small house. They all come and they pile up on top of each other until the rest of their family members can get on their feet.
Mm-hmm.
And that's very notable and admirable that, you know, they make sure no one's left behind. So whether it's family, friends, people who look like you, it's important to keep that dollar, you know, amongst recycling it amongst yourself before it goes out. But you know, I can talk about that for days. So I won't get too political.
Mm-hmm.
You also have multi-unit properties, which I've always been a fan of, for the one reason you mentioned, but also the economic empowerment. Whether you're living there and you have family, you know, sometimes people know, hey, that there can be, you know, it can be toxic, but it's still family, right? You know your limitations. So if you're in a multi-unit, you still are able to be at ease because you and that relative, you know they're safe, but y'all have your own separate space. You know, so to pool your money together to invest in a apartment building or multi-unit, you have your own space, but you also have, you know, family close. I mean, that's like best thing since sliced bread.
Mm-hmm.
Isn't that what they say?
So let's say I see a house that is 60,000 and I come to you, I'm like, Angelo, I see this house for 60,000, but I'm not quite, I'm nervous, right? And I come back, I come back a year later. Is that house still gonna be 60,000?
No, I mean, that's one thing about real estate. Historically, look at real estate over time. You know, look at the wealthy people and ask how their wealth was built. And if it wasn't built on that, they know the significance of real estate, appreciation, inflation, these prices. Again, that's the only one investment resource that appreciates over time historically, and it's been proven, you know, even if it's a slight depreciation, if you look at the percentage over time that property has appreciated versus any other investment, it's always like real estate, you know, hands down, you know, by far.
If there's an abandoned row home, does that house still appreciate?
Yes. Yes, it will appreciate if you look at over time, basically.
Mm-hmm.
Because real estate is based on location, right? So if that is in a location where it's thriving or you have something going on, it will cause appreciation. Now, it'll be a slower rate of appreciation versus something that's improved,
Mm-hmm.
but there's still appreciation. So the whole idea isn't to, hey, buy this property even if it's abandoned, because there are external factors that will stick it to you financially. Any local municipality, they want to make sure that any homeowner is being productive, and they want to remove blight. And so if you're not maintaining the property, you'll get fines and violations for grass and not maintaining the property. So when you see a property that's cheap and you say, let me take advantage of that, that's something to be mindful of. It can be an expense to you if you're sitting on it. So.
Well, you answered all of my questions. You said some good stuff.
There was one thing we got away from.
Okay.
We talked on when is a good time to purchase, right?
Yes.
So historically, and although I'm mentioning this, you know, in my mind, my whole attitude is kind of like expect the best, prepare for the worst. So I am of the mindset that I always like to have a contingency plan. So when a person says, "Oh, you're being pessimistic," no, I'm being objective, because if you're working with a professional, you want to make sure that this person has a game plan intact. If you run across any obstacles, what's the workaround? And so the person that can give you a response, it goes to show that they're progressive and forward thinking, versus the person that says, "You're being pessimistic." I mean, hey, I'm a person of faith, and only do it. However, faith without works is dead, right? So with that actually in mind, so I'm real big on looking at historical trends. So if you look at time of year, typically fourth quarter, when you're into like holidays, or fourth quarter typically can be a slow period, just based off of your standard dependent variables, time of year, holidays, changing weather.
And what months are fourth quarter?
September, October, I think October, November, December, basically.
Okay.
Those 3 months. And so with that in mind, your dependent variables, time of year, holidays, weather. However, independent variables, if interest rates are good, and no matter what time of year it is, if there were no houses on the market, then people would be homeless. So from a seller's perspective, if you're putting your house on the market during those seasons, you got to make sure you put your best foot forward, which everything is a gift and a curse, because if it's not as much inventory, and you look at a buyer's market versus seller's market, we didn't touch on that either. So I know you're going to have to edit this video.
I did ask you though.
I'm going to touch on it.
Okay.
So when you look at that, then there's not a lot of inventory, right? So we talked about how when something is rare, it makes values go up. So to answer that question and to still make my other point, if there's no inventory and you have a bunch of buyers, it becomes a seller's market. So those people during that time of year, hey, you got so much demand that it's gonna, create a bidding war or make the value go up even more. Contrary to that, a buyer's market is when you have a lot of inventory and the market's saturated, and you don't have enough buyers, so that creates a buyer's market, because they have that pick of the kitty litter, if you will.
So that has nothing to do with the rates. It's just about inventory.
It's about inventory.
Oh.
But rates does have some impact, because if you think about it as a trickle down effect, if rates are attractive, then you're gonna entice more people to purchase. So if you got low rates enticing more people to purchase, but there's still no inventory, then it's still a seller's market. So they kind of go hand in hand, if you will. So back to time of year. So typically when you're in first quarter, January, February, March, and holidays are behind us, weather is at a constant, the market then will gradually pick up, because then you're talking tax season, you're talking about spring, summer months. And then typically people like to move once their kids are out of school. They don't want to disrupt schooling when they're out of school. So that's typically when things will pick up. When you're talking about home sales, now when you're talking about the rental market, that's a whole nother perspective to be mindful of. But I don't want to give too much. I need to give people a reason to call me, right?
No, give it all up. Give it up.
So my worth is valued on my intellectual property. I offer service. Like you offer service, right?
Yes, I do offer a service.
Yeah, so you need to know how to protect that, and maybe
but it sounds like you have layers. I mean, I've been seeing, You're in several different magazines for the work you have done, and these what do you call when people write stuff on you? Oh my, your reviews are just so amazing. So please share with everyone. What do you want them to go home with? Like, what do you want them to understand? And as far as generational wealth, like, why hold back? Like, we got to get back on track because we are behind as a Black people. We are behind.
So I'm a relationship guy, so please feel free to call me, pull up my phone. These things, am I supposed to be looking at the green thing? I never know what to look at.
Yeah, just look.
Okay. I want to make sure my eyes don't do this, right?
Yeah, and what are they today? They gray or what are they doing today?
I want to make sure they're straight and not crossed.
Because they might be cockeyed, but they gray. They is gray. This one gray, this one blue. No, they do it at the same time, though, right?
They what?
They do the same color at the same. Right now, they green.
To my understanding, yes, yes. But feel free to call me. I'm a relationship guy. My number is 410-977-5630. I'm accessible daily. So if you try to reach me and don't get me, please text me or leave me a message. And usually if I don't respond the same day, I will respond by the next day. My website is locatemdrealestate.com. Well, that's locateMarylandRealestate.com. My company is the Coop Group. We're associated with Keller Williams Realty. Let's see, what else? So again, the whole relationship piece I can't stress enough because, life and people know it's not what you know, rather, it's who you know. And I always tell my kids, who you know will get your foot in the door. What you bring to the table will keep your foot in the door, basically. So, each one reach one. So, that's how we create a movement.
Let's say you have a married couple.
Okay.
A married couple, one has good credit, the other does not.
Right.
And they can't. Sometimes you can't put both names.
Right. So that's a good question. You're full of good questions. So they say you're only as strong as your weakest link. So the thing to do is to look at both profiles to determine credit scores and income. Now, typically, again, it's all about credit, no matter how much money you have. If you don't meet the credit prerequisites, you're dead in the water. So if a person makes the money, but the credit's not good, they're not going to qualify. So then we look at the person who does have good credit, and if their credit and income allows both people to buy the house of choice, then you can easily add the other person's name on the deed versus the mortgage, Now,
well, let's say it's the husband with the good credit and the wife has the money. Can she gift the husband or?
Sure, she can.
Oh, okay.
But it won't even be a gift in that situation because they're one.
Oh, so it still doesn't matter. Okay.
Yeah. So typically you run into a problem when both people aren't on. Sometimes people can both have good credit and they say, well, let's just use one spouse's income because that income alone gets us the house that we need and we can save the rest of the earnings. Typically you find it becomes more essential if a person wants more buying power. But then strategically, if that husband or wife has owned a home, they're no longer a first-time home buyer and they won't qualify for grants. So again, it's about being strategic and thinking outside the box.
So one person's name on the loan and both people name on the deed.
Now, for the sake of the grant program, I know it's going to be the person who doesn't, who has not had a property in their name on the loan in order to qualify for the grant. Now, whether or not that other person is added to the deed, I think that's possible. I would just have to check with my resources in that regard. So, but yeah, it's about thinking outside the box. You got so in real estate, this is a must mention. You got a lot of people that they'll look at the bling, they'll look at the reality TV, and a lot of that stuff isn't true. They'll look at flip your houses, and they get this false narrative. A lot of people don't know each year out of 100% of the people that actually into the industry, there is a fallout ratio where only 13% remains. So this isn't for the meek or faint of heart. I tell people all the time, ironically, it's not a transaction. It's actually a lifestyle. So you find that agents that are productive and successful are that because it's not a 9 to 5. And they say if you're passionate about it and it comes from the heart, it's not considered work. So that's perspective. I think that's
I just have to say that I met you in one of the barber shops, and you explained what you do. I talk to people, and you explained what you do, and you had such confidence, not arrogance, in it, because I can't stand arrogant. But you were so confident in what you did. Over time, I'm seeing you being celebrated in magazines. Over time, I learned that you are not just a realtor that sells, but you are also an investor, and that stood out to me as well. So I did ask you to come on just to share your knowledge and your education in the industry. And what I get is, don't wait. And when you call, he will help you with your plan. So give him a call and work out your plan. That's it.
Pieces.
Have a good one.